Liliana Baez for AM Best TV in Mexico City. With me to discuss how Mexico is faring under its Solvency II type regulatory regime is Alfonso Novelo, Director of Analytics. Alfonso, it's been 3 years now under Solvency II, and there were some fears that it would hamper market growth. Has it played out like that?
Not really. I will say maybe the first year it affected somewhat, but that was, it could be argued that maybe some of the insurance companies or participants in the market were sort of concerned about the impact that growing in certain lines of business could have on the new regulatory capital requirement. But after the first year of the implementation of this Solvency II type framework, we see that the market is growing at a good pace. Now, this is considering the adjustment in growth numbers for the Pemex policy, which is quite large, and it affects the growth of the market every 2 years. Now, the concern that we have is going forward. Some say that the economy is starting to slow down, and that could hamper the growth of the insurance sector in Mexico. But in general, I would say that the implementation, or the message that I want to transmit, is the implementation of this new regulatory framework is actually boosting the solvency of the market. Also, it's evolving in terms of market transparency and also market discipline.
Now, given the GDP projections, is Mexico still the growth opportunity for insurance that it often has been?
I will say it is. Of course, as I said earlier, there's this concern of a slowdown in the economy that could also affect the top-line growth of the insurance market. But on the other hand, considering that Mexico is still a developing market in terms of the insurance sector, the low penetration of the insurance segment in the economy in terms of premiums versus GDP leaves a lot of room for organic growth. We believe that as the economy increases its financial inclusion, that could boost the growth of the segment.
Now, are insurers in the market appropriately capitalized, particularly as they have settled into Solvency II?
Well, yeah, in general, we don't have, at least, we did a study on the whole insurance market, considered the industry as a whole. We took the numbers and with some assumptions in terms of the composition of investment portfolios and other metrics, we ran our BCAR model, and we came to the result that the insurance is very well capitalized. We will say that among around the strongest levels. Now, there are a few companies that have an important percentage of their investments in equity, and given the performance of the market, the securities market in Mexico, that could be a potential danger. But nothing as of this point that could jeopardize the solvency of a particular participant.
Thank you, Alfonso.
Thank you.
For AM Best TV, Liliana Baez.